next, we have a panel discussion on a very interesting topic, navigating regulatory changes, CFO strategies for compliance and adaptation. And for the same, I would like to take this opportunity to introduce our moderator, Mr. Sriram Ganapathy, Director of Finance, Collins Aerospace. Mr. Sriram is the Director and Head of Finance for Engineering and Digital Technologies at Collins Aerospace. In his role, he leads a team of finance professionals who closely collaborate with business and technology leaders to drive strategic and operational initiatives, optimize financial performance, and uphold strong standards of compliance and governance. With over 2 years in his current position and with over 15 of post-qualification experience in finance and accounting, Mr. Sriram is also a chartered financial analyst, bringing deep expertise and financial leadership to this function. Can we all please put our hands together and welcome Mr. Sriram Ganapathy, everyone. I would also like to take this opportunity to introduce our panelists, Mr. Soundar, CFO, NXP Semiconductors, India Private Limited. Let's put our hands together and welcome the gentlemen, everyone. Mr. Anil Taneja, CFO, Narayana Health Insurance. Can we all please welcome Mr. Taneja with a round of applause. Mr. Sanjay Kurpad, Senior Finance Controller, Cisco. Let's put our hands together and welcome Mr. Kurpad. Ms. Charu, Director of Finance and Accounting, Sandisk. Can we all please welcome Ms. Garg. And last but not the least, Mr. Praveer, Surana, CFO, Atyati Technologies. Can we please put our hands together and welcome Mr. Praveer, Surana.
Good morning, everyone. Little bit more energy, guys. Good morning, everyone. We are just at 10:30. That's a lot better. Okay, so what do we have today? We are going to sort of, this session, we are sort of going to talk about how as finance leaders, as finance teams, we can sort of navigate through the web of compliance and regulatory changes that are sort of happening today, right? In terms of, each of our organizations, the regulations change, they keep evolving. There's also different compliances across different regulators and across different geographies, right? We'll also cover a little bit more about how you as finance leaders can structure your finance teams, right, to have adequate monitoring and oversight over these compliances. Also talk a little bit about the digitization/automation journey. I think none of the conversations get completed today without talking a little bit about automation, right? I have the easy job today, that of asking questions. My fellow panelists today, they have rich expertise, across different industries and experience. We can sort of do a quick introduction of the panel and then we can get started.
Hello. Yeah, good morning, everyone. My name is Soundar. I am the CFO and board member for NXP Semiconductors. I think most of you would have seen a lot of news about semiconductors these days, because that's been the darling for the media, at least for past few years, and it looks like it will continue for a few more years. And just to give a tidbit is, government is coming out with a new passport called e-passport. I don't know if somebody are aware. And there is a chip attached to that. And that chip is from an NXP Semiconductors. So that's about it.
Good morning, everyone. I am Anil Taneja. So I am working for Narayana Health Insurance for the finance function. I'm not sure most of the people who are aware about Narayana Health as a hospital. So prominently people may know Narayana Health as a hospital company. But, in the recent past, we got a license for the insurance business. And we are setting up a first kind of insurance business wherein it will be an integrated healthcare model where, from the clinics, from a consultation to an insurance and to an hospital, it will be an integrated care model, which is, US-based concept, which Dr. Shetty wants to, implement in India. And from the regulatory standpoint of view, I'm sure everybody is aware that, an insurance company is governed by the IRDA, and IRDA, our banking industry, has a specific regulations, and we need to ensure that, we have to comply all the requirements as per IRDA. IRDA has come, is also coming with many changes, and they have concised their regulations. So we look forward that, from the regulatory framework point of view in the insurance segment has gone, in toned down in a concise manner. But there are many things, in terms of their delivering vision for 2047, delivering insurance to everyone. They are coming up with the, dynamic changes. And, hopefully with the support of data, artificial intelligence, we have been able to do that. Thank you very much. Thank you.
Hello. Hi everyone, this is Sanjay Kurpad. I'm Senior Finance Controller. I head accounting and reporting and compliance function for Cisco India. I'm also a board member for a few legal entities within India. So I work for Cisco. Hope many of you know about Cisco. So we are a leader in networking and also security solutions. Thank you.
Hello, morning everyone. I lead the India Finance for Sandisk. We have recently spun off from Western Digital. All of you must have used that flash drive from Sandisk, or most of you would have. And taking on from Soundar where he left, we are also into semiconductor space. And I think blue-eyed baby for the government right now. And in India, we have our software development function, a small back office for quality control and IT services, as well as we have a revenue office also in India supporting India. And very excited to be here today. Thank you for the opportunity.
Good morning, everyone. I am Praveer Surana. I am the CFO at Atyati Technologies. Unlike all other my fellow panelists, we are catering to Bharat and not the real Bharat, I would say. We are driving financial inclusion across the country with around 25,000 agents who use our software and facilitate banking transactions in the hinterland. We are service providers to almost all public sector banks and few private sector banks. This company is a pioneer in this space. We started around 2006 when this whole concept was formulated by the Department of Financial Services, Government of India. And then since then we have come a long way among the leading players in this space. So our motto is to reach the unreached and to take the banking to the last mile. Thank you.
Thank you. So, just to set the context, right? I call this to be an era of regulatory cholesterol, right? And, Manish Sabharwal from Team Lease, he's in this word, right? Today, if you look at it, compliance has become pretty much a very important part of even boardroom conversations, right? And I would say two drivers to it. One is regulators seem to be asking more and more information, right? And regulators probably have a better picture of your organization than what you yourselves have, right? Because they are using AI, they are far ahead in the curve, right? And the second aspect is also regulatory penalties have sort of become, in terms of contravention of regulations, they have become a lot more stringent, right? Board members today have, a lot of legal liabilities that come along with non-compliance, and that is not, for most companies, from a corporate governance standpoint, that is being taken pretty seriously and severely, and board members are cognizant. And so they're asking, more and more intensive questions on what's happening. They also want proactive monitoring around this, right? Just a stat, and this is a damning stat, right? In India, we have like roughly about 1,500 compliance laws, right, on an average that, across, different sort of verticals, whether it's tax, labor, shops and establishment. And, roughly about 800 of them, which is 55%, right? 800 of them have provisions of criminal provisions in terms of, provisions for going to jail. In fact, the Factories Act had 700 different ways of how you can go to jail. So that's, just to give a bird's eye view of what you are really facing today, right? So in the light of this, Soundar, I know from an industry and, specifically from your own experience, what are the emerging sort of significant regulatory changes and challenges that your organization is facing, and how are they really responding to these?
Yeah, thanks, Sriram. Before I answer that, there is one saying I think many of us will know. There is one thing constant in life, and that is change. So whether we like it or not, it will happen. And I think that is the same with regulations also. So regulation used to be like a cyclical sort of a thing, but it is no more. Now it is, changes will keep happening constantly because as business, if you really see, business has become multidimensional and the requirement from the business has changed drastically. When that changes, the compliance part of it also has to change because this has to catch up with the business. So having said that, what I thought is, generally I say is, now the finance role has changed. If I have to put how it has changed, we used to give hindsights with whatever data is there. Then now expectation is we give insights and then forecast. So that's where we are moving towards. So from hindsights now we are getting into forecasts are becoming a business partners in navigating through the challenges of the business. So when that role is moving that way, the compliance also needs to move somewhere really towards that direction. So having said that, what I wanted to run through is some of the changes and how the framework of compliances have come, and then how this compliances can be done much more effectively by using automation and AI. So some of the critical things which at least our industry goes through is, one is geopolitical. I think some industry have, but we specifically have as a semiconductor industry because there is China and other factor between China and US which is having more impact. So when I say what is the geopolitical impact is, 60% of the world chip manufacture happens in Taiwan, and China claims Taiwan as their part. And if that happens, most of the chip manufacturing will stall. And US has put a restriction on transferring some of the technologies back to China or to Taiwan also. So that is a restriction which we have. So now the way the compliances are, you need to know what is your sourcing, how do you manufacture, as well as how do you distribute. Everything got impacted by this geopolitical risk. So there is a China plus one strategy, so people do something only for China region and something elsewhere outside of the China region. That's one of the compliance things which happens. Second thing is, BEPS 2.0 pillar, wherein you will have minimum taxation across. You will have IPs coming into play. And similarly, apart from that, when we come to data, now we'll have a DPA in India. Similarly, AI Act in Europe. See, this will start making changes in the way we do things today. Means your financial system needs to comply to some of these standards as and when they become applicable. So apart from this, there is export restriction, as I already said, which is one of the critical path. And finally, what I say is about the PLIs and subsidies which we do get from the governments and other institutions, and do the compliances for the same. So those are also changing from the way it started to way it is getting reporting. So if I have to put all the things, what is happening today is, most of these compliances cannot happen in silos. Means, finance only will do this, purchasing only will do this, IT only will do this, legal only will do this. This is the way we are structured today. But I think that structure is no longer going to be valid because it has to be a collaborative effort of all the departments, and that structure is what it will start moving forward. Because when somebody says, there is a transfer pricing issue, when a contract is done, the legal people will also need to get involved in that. When a procurement contract happens, legal will also get into it. Taxation team also will get into it. So it cannot be like isolatedly solo action which used to happen. That can no longer continue, because if you continue to do that, the efficiencies are going to be impacted. So it has to be a collaboration of all the teams and departments, including the finance, procurement, IT. That collaboration team is what is going to enable the compliance in a much faster manner. So in keeping with that, one of the framework, at least what I thought was, you need to have a common core committee of people with all these functions. Have them the ownership mapping, saying if something is purchasing, then purchasing should take a lead on that, whereas other people will provide their support for that. So that has to happen. If there is a taxation team available, and if it is on a BPS or on a transfer pricing, then those guys have to take the lead and the other people can support them. So all these things should happen, and that should get audit ready. And whatever requirement is there on compliance, as long as we don't put it as a part of our regular process, it is not going to be efficient, because everything you do at the end and say, oh, this I will add at the end, this I will add at the end, and my report comes by, then I think you will keep struggling. Whatever is the requirement ultimately has to be embedded at the start of the process. In that way, you will get the output what you want at the end of the process. So that is something which has to be done, and you need to be audit ready always. And finally, it needs to get change management, which becomes very critical, because we are all used to working as silos, and that is where we are very efficient. But once we start collaborating, then there is always a conflict which comes by. And I think that is a change management which the team has to go through and get aligned to that, because end of the day, we are compliance has to move from being a cost center to becoming a business enabler, so that it enables the business efficiently. With that, I think I'll stop it here.
Thanks. Just taking this conversation forward, right? So the way I look at, say, let's take GST or income tax or transfer pricing, it's almost like a 2-decade exercise. So you have a responsibility of, going into the past, which is, tax departments going back and scrutinizing transactions, and then that going through various litigations, but also managing the future, right? And the last 2 years have shown us that the number of compliances that have been put on corporate, specifically with regard to tax compliance and reporting, have significantly gone up, right? Praveer, my question to you would be, how do you think teams should sort of look at managing short-term compliance needs and the longer-term strategic needs that the organization anyway has from a balance standpoint?
Sure, Sriram. First of all, I would like to, how I see it, that it is a misnomer that the compliance needs are short-term. With due respect, as far as I see it, it is with the kind of regulatory overreach we have in India and even otherwise, and particularly for the business which we are in, I see it as very, very extremely critical to the business. Of course, when we look at strategic planning, we are looking at growth, we are looking at profitability, and as we all know, cost of non-compliance is very high. And accordingly, it has to be built into the businesses and processes right from scratch. Whether it is a automation project or it is any other new venture which we are looking out, we must be building it at the core of it. I'll try to, of course, the main concern which comes, which Soundar also rightly pointed out, is regarding the cost. We should not be looking at it as a cost center. And that is where the challenge, the perception which comes, that it is something which is cost of doing business and not really inbuilt or embedded into the business. And as finance professionals, we need to really counter that view internally, or rather clarify it to our fellow members in the management, that it is something which they need to embed. What is being done increasingly, at least if I have to speak what we are doing at Atyati, is that we are increasingly using artificial intelligence. Of course, that is the flavor of the season. And that is helping us a lot to reduce the cost of compliance, and of course leading it, or rather integrating it with the business at a minimal cost. I'll try to give a small example. Now, we are also providing small ticket loans to the rural borrowers. On one side, if we provide loans to someone who's otherwise not eligible or not a good borrower and the probability of the person repaying the loan is less, then we lose out on trust of our principals, which are the banks. Then they will stop doing business with us. On the other side, if someone is really eligible and we don't provide loans, we are losing out on an opportunity, and again we are not able to scale up. And of course not meeting our internal goals and not the aspirations of the principals, which are the customer, our customer banks. So what we have done is that we have kind of identified an ideal F1 score, which many of you might know, it is a mix of both precision and recall. So when we say precision, it means that out of all, like, whatever, wherever we are disbursing loans, how many good cases we have disbursed. So that is also a good measure that there is accuracy, so to say, that we are disbursing to good borrowers only. Of course, the estimates go wrong here and there, but largely it serves. Then on the other side, to ensure that there is completeness, we use the recall measure, wherein are we missing the good customers? So to avoid that, we use the recall score, and a mix of that is the F1. Sorry for using jargons. So a good F1 scores helps us determine whether to find a right balance between trust and scale, or so to say growth, I would say. And from a long-term strategy point of view, it gives us a good benchmark to look at. So my view is that to finance team, of course, we are, the way we are groomed, we keep looking at compliance as an essential factor, and we try to look at it from all perspectives. But we need to, as also my fellow Sundar rightly pointed out, that we need to really make it a collaborative effort rather than looking at it in silos, and try to support our fellow team members or other fellow teams, I would say, to take it with the right perspective, and which will anyway help the whole business to grow. And we need to act as enablers. So that is something which I would like to point out here.
So I think Praveer sort of brings an important point, right? In large organizations which are, cross geography, cross sectors, right? Multiple legal entities, that sort of a scenario. Finance teams, I feel, need to be really agile, right? One is agility and adaptability, right? Sanjay, my question to you is in terms of how do you think from a finance team standpoint you can sort of proactively sort of get your finance teams to adopt to the ever-changing regulatory environment?
Thanks for the question, Sriram. I think as other panel members told, being ready for all future changes is very important. So I will tell you how Cisco does this, being a large organization and being present in over 150 countries. So this is very important to manage the compliances. So what we do at Cisco is that, see, first India is treated as a high risk or high regulatory country. First there's a classification done, and then we go. So for India there is much more scrutiny, not scrutiny I would say, much more closer watch on what are the changes happen. How do we do that? We, as others told, we need a committee. Exactly, that's what we have done. We have something called a governance board set up, which meets monthly. So where all the functions are represented, not only finance, be HR, legal, logistics, etc. Various functions are represented in the governance body. So we meet on a monthly basis, and we have listed, we follow up on all the regulatory, whatever we are seeing the impact for our team. We track them in a tracker, we follow up the changes and see that those are closed. That's one of the mechanisms which we have. And as I told, because India is a high-risk country, so we have a half-yearly readout given to our CFO staff, corporate CFO staff. Right, we have all the SVPs, etc. They look at what is happening in India. Right, we give a half-yearly readout to them. Apart from that, from an accounting risk point of view, see, any regulatory risk will have an accounting impact because I have to create a reserve. We have to see what impact it will have from an accounting point of view. So, from an accounting, we track on a quarterly basis. We again give a readout to the accounting leadership on what changes are happening and how will it impact the accounting, books of accounts. Right? That readout we give on a quarterly basis. Apart from that, on a monthly basis, we have to give what we are foreseeing. There's something called a watch list, which we say. There are significant transactions and watch list where we track all the significant transactions which are already happened and we have to record the books, and some are on the watch list. So we have the new labor code listed in our watch list since 3-4 years. Nothing has happened, but I'm telling how advanced are proactively we track that, right? Still we keep that in the tracker, though nothing is happening on the new labor laws as of now. So, and yeah, apart from these are whatever the set cadence. Apart from that, we regularly meet our tax teams, other teams as and when it requires. I think I see this as a good model to manage the risk.
Yeah, just from a just taking that, right? I mean, I think one of the takeaways there is once finance teams have to have like a regulatory cadence that is and a governance that is put in place, right? And that is where I think one of the areas where you can sort of reduce efforts is just on how we can sort of digitize and automate. Now that's the buzzword. I can tell you my own personal experience has been it's sort of been mixed, not because service providers or the SaaS organizations are doing anything wrong. They are doing excellently well. It's just that just to get the entire framework in place and get various functions within the organizations together, that is the entire journey that you need to sort of cover, right? And that's the difficult part, right? Charu, any specific sort of experience, that you can sort of talk about in terms of digitizing, automating, how that sort of helped from a compliance?
Sure. Thank you for the question. So I think all organizations have a different requirement for digitization. I think we need to evaluate and mindful that about the size, complexity of the organization that we are working on the digitization requirement. And I think another thing that we need to take care of is that there has to be a starting point for any kind of digitization. So all finance, accounting books give you a story if you look at very closely. If you look at your GLs where you park your interest, penalties, etc., that's a good starting point. That where is it that you exactly have the issue. Once you have figured that out, I think that's when you need to understand whether it is the understanding gap or there's a tool which is required to do this work properly, or this is a training gap. Once you're evaluating that you need some kind of automation to do this activity, I think that is where you start. So now you have plenty of tools which are already available in any organization. So if you feel that the tool which you already have available, like some of these are ERP systems, are Oracle, SAP, and NetSuite, etc., you can talk to your IT team and understand if the functionality is already available. Sometimes it is just, enabling the India localization piece, which will help you automate most of your stuff. If that's not done, go ahead. We can go ahead and do that. Once that is taken care of and you still have issues, then you can look at some of the third-party tools which are available. Like for withholding taxes, you have small third-party tools. Then you have for GST, for your return filing, you have. For a lot of tools are available for reconciliation, etc. Like Blackline is available. We have ARC in our organization. Then there are data visualization tools like Power BI is there, Tableau is there, which will help you automate the tax reports, etc. that you need. So there are third-party tools, reconciliation and data visualization tools. And I think another requirement, then you have like Soundar or Sriram, I think one of you mentioned that we have about 9,000 plus compliances. So how do you track that? So therein comes in the entity-wide compliance tool. So we have implemented a compliance tool which covers our people solution, which is HR, the crew team, which is related to your facilities. Then we have legal there, digital data protection and other requirements. Then, of course, we have finance, then we have logistics, like if you're registered with SEZ or STPI, their compliance. So all in all, annual compliances are actually for ITS sector is more over 2,000. Now all this is rolled out, then what happens? I'll give you one personal story. So we have all this digitization, and despite that, we realize that people are not entering the data properly. So, so, once you've done all this, you kind of lose track and think that the machinery is working on its own, but no, it needs a little bit of greasing, which comes in terms of awareness sessions and refresher trainings. So that is very important. People understand what they're supposed to do, and they're actually going ahead and doing it on time. So that is the softer aspect of the digitization, that we need to be mindful of how people are using the technology. And of course, the buzzword, your generative AI, co-pilots, agentic AI. So we are using Copilot, and that helps us in fast tracking the approvals and all. We are exploring agentic AI now, and let's see how that plays. Thank you.
Just to add to Charu, see, we speak of continuous accounting now. That is because to have a real-time view of our financials. I think the same way the compliance also needs to have a dashboard, which is more live than it is at end of something. Rather than that, it should be like a continuous one, because number of regulatory changes are happening across. We should know what those regulatory changes, there is a tracking available for that. And then the business scenarios on that. What is the changes that act or regulations can bring across? How can we enable our business to get into that environment? So to get into that, there is a new framework called Continuous Control Monitoring, CCM, wherein you put a framework of things to know where the changes happens, and you know it live and not like a dated one. Because dated one was a past what we used to do. When we say continuous accounting or real-time accounting, it means you know as of someday you can just close it and say this is my balance. So that is where, so compliances also needs to get into that sort of a stage, wherein you have a real-time dashboards of what are the various compliances and regulations changes which is happening, and where are you standing in that, and how it is impacting your business. I think thus, that sort of tracking makes it much more real and much more business enabled than just a compliance aspect of it. Yeah.
Sanjay just before spoke about India being a high-risk regulatory country, right? And the reason is, regulatory changes can sort of significantly impact your sort of financial capital allocation decisions, right? And I'll sort of talk about a personal experience here, right? Years ago, 2016, 8th November, demonetization. I'm working with a fintech giant, right? And 8 p.m. Notes are demonetized. 9th November evening, right? We are having, the country leader calls in. We are having a meeting. We are talking about the agenda for the meeting was, hey, do we need to make pricing changes for the market? And make it, give like a waiver in terms of pricing that we are charging to enable digital payment, right? And just 15-20 minutes before the scheduled time, the Ministry of Finance makes an announcement saying, hey, they are cutting off all MDR, right? MDR is a merchant discounting rate on card transactions, and they've just waived off all charges. And the country leader comes and he says, hey, do we need to even have this meeting now? 5 minutes, the meeting is ended, right? So just from a Anil, just from I know you come from a regulated industry. Any specific nuances? A lot of the regulatory changes can have significant impact on sort of capital allocation, risk management strategies. How do you sort of deal with?
From the insurance standpoint of view, IIDA already comes with the solvency margin requirements, right? Then you need to cater a certain a capital invested all the time, because it's a policyholder's liability. So considering it's a public responsibility, you need to cater a special, sort of ratios of capital, which you always need to pump into the financials. Now, having said that, as you rightly mentioned, in the last year itself, of course, I have, experience of healthcare also, but I will talk now for insurance. Last year itself, they come up with requirements that you can't take advances from the policy holders, and only once you issue the policy you can take the money. So it has changed again the capital requirement, that your funds, cash flow, everything has changed. Thankfully, we were working on a model of that we do first test and taking the money, but for the rest of the insurance company, it has become really a challenging aspect. And further moving to again in the last year, they have come up with the long-term accounting policies where you cannot recognize if you have taken an insurance for 3 years, you cannot recognize that income in the very first year. There were certain different regulations are there in the insurance side where you can 50% still recognize in. So that has again come to the capital adequacy ratio, because it straight away hits your capital adequacy requirements, and then you need to pump in money again if you change the accounting policy. So these are very, very critical changes which comes in a very systematic manner. And now the buzz around is about the IFRS 17, where the complete accounting model is changed to principle-based accounting, where a policy period, coverage period, for example, if you have a 10-year policy kind of period, then you have to account for the profitability of, for a 10-year perspective from the contract point of view, which has already been, implemented in the Europe and these things. And India, anyway, IRDA is working with us, in terms of implementing stage 1, stage 2, stage 3. But of course, that will again impact the capital requirements, where the current scheme of business, how we are doing it, how we are recognizing the capital. Now, once the IFRS 17 comes into the picture, and it will also change the capital requirement. The solvency margin is going to be reduced. But I would also like to touch upon the various points my other panelist has talked about. It is also about since the compliance is more into being a public kind of company we have. We also need to be aligned into the software systems in data set, because our industry is, we are dealing with 130 million people, and if you cover all even if 10% of the people into the insurance segment, so you can see the data set. In data set and maintaining the compliance in terms of, the various compliance point of view. So what our approach should be, that data set should be in terms of providing insight to the business. The more we align to the business data set point of view, automatically the data will, if the data set is clear, it will give you the complete compliance reporting point of view. It will help you to manage various regulation which relates to the policy protection point of view, where you cannot share the information of policy protection. Now DPTP is coming now, but for IIDA, it is always a policy protection where you cannot share the information. And from I would just touch upon the other points also, from the different legal entity perspective. Now, when we work other than insurance company, all subsidiaries, we can function in a different manner. But the moment we go to an insurance company, you need to have a separate office, you need to have a separate software, you cannot talk to each other. Everything is differently, managed. So here the efficiencies of having same companies, the challenges are quite different as compared to we have a multiple legal entity. Here, though we have a subsidiary, but we have various regulatory requirements that despite that you have a principal companies, you have a restriction to deal with the manner and do as we talked about transfer pricing from, from Indian scenario. It's arm's length pricing we have to do for every transaction what we do with the healthcare scenario. So those are, the various challenges which comes in the form of capital requirement and solvency point of view. And it also impacts regulation to our holding company, which is a healthcare company. So how to manage that? So those are the very, nuances things, as you rightly mentioned. And we need to make complete alliance with all the teams and things so that, the management and the team are jointly coerced in a manner that we are all aware about the solvency requirements and how the compliance is going to be taken in place. So this is from my side. Thank you.
Okay, as we sort of run through this conversation, one rapid fire question for each of you, right? One piece of advice, one word, right? One advice that you would give to each of the finance leaders sitting in this room, and it should be in one word. Yeah.
I think one word I'll give something which is not finance, right? It is the mindset. Mindset is something which drives all other things. So I'll give one word as mindset.
There is a new word which is very coming and which is very important. It's called business partnering. That is what I would suggest. Thank you.
Maybe in similar lines, collaboration or breaking silos.
So I was also planning to say collaboration. I have to think of a new word. So I think awareness of what is going around you and keeping a tab on the latest. So awareness is the word.
Taking the liberty of one full sentence and not one word. Stay close to the business, act like an enabler, and partner with the business. Unlike the old school CFO mindset, we need to evolve ourselves and try to stay close to business as much as possible.
Just one final thought, right? I think one of the principles that I follow, and Narayana Murthy has made this statement. Good news follows the stairs, bad news follows the elevator, which means, hey, if you follow this principle from a compliance, you're generally sort of safe, right? Make your stakeholders aware if there's bad news coming so that they're all sort of prepared for it. Good news, you pass it on only when you get it, right? So that's just my concluding thought on this conversation. I know we are almost out of time, but we could sort of have maybe can throw the floor or open up the floor for questions. Do we have time for questions? One question, okay.
A common question to all the panelists. Right? See, now we talk about business in terms of finance. As Sir Praveer talked about, lending money to the good people and all those stuff. But do you think, sir, that nowadays the CIBIL is updated? Because see, most of the good lenders or bad lenders determines based on CIBIL score. And CIBIL is definitely not online in today's scenario as well. So how are we going to tackle that?
I think your question is very valid. What at Atyati, as I mentioned, that we are primarily catering to the rural markets, wherein if a person loses out on the CIBIL score, he will or she will try to borrow it through another family member. So some of these dynamics, while for salaried class, of course, matter a lot. For SMEs matter a lot, but when we speak about the rural small ticket size loans of say 50,000 rupees given in the hinterland, people are really not that concerned, and they have the workarounds to get loans somehow. That is where we need to be really very, very careful about the patterns, look at the patterns, and there is no definition of good or bad. Sometimes there are extraneous factors like the government interventions or maybe the climatic conditions, but largely if we can observe a pattern, we can continue to have a good portfolio which will draw the customer bank towards us as a fintech organization, and that is what we strive to do.
Okay, thanks for being an engaging audience. I hope you guys like this session. In case you have any further questions, you can sort of reach out to us. We'll be there outside. Thank you.
Like TCS, they got to qualification in their audit report last year.
Yeah, so I can talk about the specific experience, right? So, we are into aerospace, right? Part of a global group that works significantly with the US government, right? So if you know of the Apache, Chinooks, we have pretty much content on all of that, right? A lot of our work, it gets classified as technical data by the US government, including accounting sort of data. So they cannot sit in, servers anywhere outside of the US, right? And we've gone back, sensitized our global stakeholders, taken that as a qualification at our end from an audit standpoint. We continue to engage with the government. We have our government relations team involved into sort of sensitizing the government, but it is what it is. Sometimes it's just about making sure everybody is sensitized, and aware of the situation, and then sort of making sure that they are aware of the risk. So sometimes there's no there's no right path to it. You just sort of deal with it and move forward.
Thank you.
This is the last question, by the way, guys.
Thank you. See, today's business scenario, we are looking at vendor evaluation is a very key. Being a global player, everywhere we see that when you select a vendor, there are multiple sanctions has been put by across the regions, right? So when you select vendor in India, they immediately the next question comes from the US whether this vendor is sanctioned to do business or not. So maybe I wanted to know, is there any vendor evaluation portal available to filter this vendor is right vendor to do the business, or how do you see that?
See, one of the things what I say is, most of the things is this sourcing, manufacturing, distribution. I said this is one of the compliances which you have to do. When I say sourcing, it is whether this vendor is valid or not, whether it is from a valid country, and whether it is going to get manufactured in a valid country, and whether it is finally getting distributed to a valid country and not a sanctioned country. So all this comes, so you should have not only for vendor evaluation, but till the end where you sell also. So it is not one piece of it. I'm saying is it is an integrated part of your whole business. So it should start from your sourcing, it will go to your manufacturing, and it will happen in your distribution also. So it's not one vendor you should check. Who will cover all the three is what I would say, and not a particular vendor for this. Means it should not be silos is what I'm saying. Means you have to get out of that mode and get into more integrated paths. So you have a integrated compliance thing, and not exactly for one particular activity. Then what really happens is for each country and for each, if you are a global organization and in 30 countries, each country will come out with its own thing, and each country will have. So then you will end up having islands of requirements, and it will never get integrated into the mainland. So I think having an integrated path of compliance is much more better. And I don't know which is the software, because the software I use may not be usable to you. So I think one size does not fit all. Maybe we have to find out our own shoe size and then wear it. With that, thank you.
I just want to add on a lighter note to it that, from an insurance company standpoint of view, we do a policyholder, validation also. So whether the policyholder is a sanction or not, so you can assume, the responsibility if somebody is a barred person across UN nation and all those things. Those also we need to, as per the RBI and the guideline, that we have to have a software to validate all those transactions, as you rightly mentioned. But whatever is the available software in the market, we are using it. But leave the vendor, we are doing for the policyholder. Thank you.
I will give you the name of the vendor if you need for vendor evaluation. Yeah, outside.
All right, thank you so much, our moderator. Thank you, panelists, for such an interactive and engaging discussion. Can we please put our hands together for our moderator and panelists? I would like to now call upon Mr. Jayesh Khatri, Head Finance, Lenovo Global Technology India Private Limited, to do the honor of felicitating our moderator and panelists. I would like to request Mr. Khatri to felicitate our moderator, Mr. Sriram Ganapathy, Director Finance, Collins Aerospace.